Hi everyone, welcome to today's trade of the day, and for today's trade of the day we will be looking at the euro dollar. Right, so the euro dollar has a very interesting configuration. I just really want to focus on this side of the picture. Okay, we see that price made a high here. Alright, and then it made a lower low. How do I know this is a lower low? Because compared to this point here, alright, it's lower. Not just that, okay, it also made a lower high. Alright, so we have the low, we have the lower high, we have another lower low compared to this one. Alright, and then price came back up, alright, and it made another lower high. Okay, so people would have thought that this over here, the trend is changing, but if you look on the longer term time frame, right, we are in a downtrend. Okay. So what I really want to show you guys is that really price can actually pull back and then come back down again. Alright, so it's an intraday sort of thing. Okay, so let's use a Fibonacci retracement from the last low all the way to the high. Open all Fibonacci ratios. Alright, we see that the 61.8 is actually over here. Alright, so we can go ahead and keep the 61.8. Alright, so at the same time, okay, looking at the previous movement from the high to the low, we also can do a retracement, high to the low. Alright, I'm thinking a 78.6, okay, we see that price reacted at the 78.6 level over here. So let's put in the resistance, okay, and then let's put in the support level that we're looking at. So on the 4 hours we already have the resistance and the support. Let's go down to the lower time frame on the 1 hour. So on the 1 hour we see this, right? We see that price sort of previous price action, price pushed all the way up, came back down. Alright, this price action, price pushed all the way up. Instead of coming straight back down, right, price actually went sideways, showing sort of a indecision, right? So this is really a very strong sign that the market is telling you there is an indecision, and price broke back down to the bottom, to the downside, right? So we can expect price to come back to test this area of indecision and go lower. Okay, so let's use Fibonacci retracement from the high to the low. Open all Fibonacci ratios. Alright, I'm actually looking at the 50%, 61.8 level. Okay, so I'm just going to go ahead and highlight the 50 and 61.8. Now the negative 27 is close to the 4 hour 61.8 retracement, so I'll just leave it there as well. Okay, so with that I actually have all this. Now what I want to do is, okay, I'm actually going to go ahead and put my entry, alright, at the 50% level, alright, because there is a graphical overlap in close. We can see that there is a graphical overlap here, okay, which price is really holding below, alright, but I just want to back the entry up because it looks price is choppy a bit and there's this bullish engulfing candle, so it might extend a bit. Alright, and I'm going to put my stop loss just outside of the 61.8, so give my trade a bit of room to breathe, right? Now alternatively, okay, what I'm expecting is for price to come up to the entry and go back down. So this gives a very nice risk reward sort of ratio. But if price breaks above the stop loss, okay, I'll immediately reverse my trade and play it to the 4 hour resistance, which I have identified. Okay, so let me tidy this up. Make it a bit shorter. Alright, so this is really the general idea with this as the take profit. Okay, last but not least, we can actually include moving average. Alright, 9 is too sensitive. Let me just make the color a bit darker. Normally I use 34, 55 Fibonacci numbers, and we see that 55 holds the market very well in a trend. Right, when the market is in a trend, look, it barely breaks above or below the 55. So we don't expect it to break above the 55, okay, which is why our stop loss is slightly higher. Alright, and we expect this push down. So thanks for tuning in today, guys, and I'll catch you guys tomorrow.